What's up, you guys? Zoeb here from OneGlanceTrader.com, and in this video I'll be sharing with you a few examples of how you can trade support and resistance like a pro. Now, for those of you who watched my last video, and again if you didn't, I'll link it in the top right hand corner, I broke down my full pin bar trading strategy. And in that video, I used an indicator called the round numbers indicator, which again you can download absolutely free. Links in the description. And what this indicator does, it paints natural support and resistance lines at round number levels. Now, when you apply this indicator and you start looking at a chart, you will notice that price tends to halt or either access support or resistance at these levels. Now, when you overlay that with my indicators, so the OGT price action indicator, the RSI MTF indicator, it becomes a very powerful trading approach. And we're going to go onto the charts now and have a look at two examples of where you can apply my indicators with the round number indicator to start trading these levels like a pro. So let's get to it. I took a couple of screenshots of some example trades that I want to just walk you guys through, and I've put it in paint because it's easier for me to kind of draw on the chart. And so just to let you know, this is what I've got, the indicators that I've got on the screen. So I've got the round numbers indicator, which let's go across to the right. You can see is at the 100 levels, 500 levels, etc., etc. I've got the price action indicator with the pin bar setting on, which is all these pin bars you can see with numbers on the top, and the numbers are the room to the left. So how long ago price where the 10% of this top wick was 3 bars ago, so this bar here last time price was at that level. So that's what the numbers mean. And then you got the arrows. The arrows are the RSI indicator, MTF indicator, where price is overbought or oversold on, I think this is a 15-minute chart, yeah. So it's overbought on the 15-minute chart, the 30-minute chart, and the 1-hour chart. So some really big extremes here. So and lastly, I've got the MACD linear weighted moving average indicator. And again, I'll link all these inside the description so you guys can look at the exact kind of chart that I'm looking at here. So what I want to talk about at the moment is this pin bar over here, the one that's got 2304 on there. And you guys know how I like to trade. I like to set my alerts up, so they're all set up. I'm there doing my day job and doing other things with the family, what have you. I get some signals, so all these signals I'm getting, I quickly look at the chart. I'm looking at this here. It's in the middle of nowhere, not near any support and resistance. I'll ignore it and move on. So I will then get this signal over here, and there are a number of reasons why I liked this particular signal, and I'm going to walk you guys through my logic at the moment. So the first thing is the bar is on a natural support and resistance line. So as you can see here, it is on the 0 level, which is good to see, and you can see that price has gone up, and this natural area of support and resistance is used as a resistance line. What we've also got is not only have we got natural support and resistance, this level has been holding, and you can see that because you've got 1, 2, and now a third touch here, and you can see you've got all these upper wicks over here as well, which is what I really like about this. So you've got 3 tests of this particular level. So even if you didn't have this line drawn using the round numbers indicator, you can visually see that this kind of level is being used as resistance. It's tried for the 3rd time to push through it, and you know the bulls came in, but then the bears brought it back down and creating this kind of pin bar. So that is something that for me is really key and really easy to see when you straight away look at the chart. And this line that we've created around the 0 level has made it easy for us. So that's the first thing that I like. The second thing I like is this room to the left. Now these are 15-minute bars. Yeah, so what it's saying is that the top 10% of that wick over here price, so if I get rid of that, I don't know where 10% of the wick is. We'll say that that bit there is 10% of the wick. So price was at this level 2,304 bars ago. Now, on a 15-minute chart, I think I calculated it roughly in terms of time, how long that actually is, and it's around a month. So price hasn't been at this level for around a month, and that's a strong indication again that we could at least see a short-term reversal. And you guys can see what's actually happened, and we'll go on to that inside a second. But here is another classic example of where prices reached an extreme and it hasn't been there for a while, and therefore expected to at least do a short-term retracement. So we've got 3 times where prices tried to break this area, it can't, and it's reaching new highs where it hasn't been for a very long time. So again, that is something as well that I really liked at this level. And the next thing is just looking at the MACD. I like to see what's going on from a divergence perspective here. So you can clearly see that price is kind of flat, so it's not really making any higher highs. And then if you have a look at what the MACD is doing during that interval, or when this first high was made, it's making lower highs. So classic bearish divergence, or regular bearish divergence, is when price makes higher highs and the MACD makes lower highs. MACD is, you could argue, has made higher highs, but it hasn't made lower highs. And as I've said, with divergence, divergence is that the oscillator and the oscillator should mimic what the price action is doing, because the oscillator is calculated from price. And when there's a disagreement, there's a strong probability that you'll either get a reversal if it's classic divergence, or if it's hidden divergence, you'll get a continuation. Majority of the time, the probability is inside your favor. It's like an early warning kind of system. So when you've got this situation over here, which like I said, it makes life a lot easier to kind of see. You've got one thing. So you've got one thing here. In my view, you've got a potential reversal signal there with the MACD doing lower highs and not really making lower highs on price. You've got 1, 2, 3 touches of that area, and every time price has got there, you've seen a retracement come into there. So that is, for me, a good sign for me to take a sell trade. And we're on a 15-minute chart, so price is moving quick, but not that quick for you then to very quickly to be able to make that analysis. And if none of this, or if some of it's not making any sense, again, just drop me a note, put a comment in there, and I'll be able to answer these questions. I really want you guys to start, when you start seeing signals and jumping on a chart, these are the type of things that I'm looking at. And again, I don't try to make things very complicated, just a few tools on there to help me quickly analyze the chart. And again, because this was inside the past, and I could put in the 200 MA on here and look at that other stuff, but again, I didn't feel I needed to, based on the basics that I've got here, to at least get a 1-to-1 or 1-to-2 kind of trade. So if I just take all these off, so I've done that analysis, and I feel that I want to go short. When do you go short? And again, there are a couple of ways you can do this. The first thing where you could do it is that you wait for price to close below the pin bar. So that first one would have been this area over here. So that would be one thing to know, that actually price has broken the low, so therefore it wants to go in that direction. It could just reverse straight back up and stop you out, but majority of the time, when you've done your analysis correctly, in theory you should be going inside the right direction. So you want price to show you the way. The other way, which I advise pretty much for beginners to do, is, and it requires a bit of patience, is to wait for the cross. I can draw the line. I can't draw the line straight, but you kind of get what I mean. Is you wait for the cross of the MACD, because what the MACD does is confirm it. It confirms your divergence there when you got the crossover, and sometimes it does signals quite late. As you can see, you're quite late into the signal, but then you know, it does protect you a lot for potential a quite quick reversal. So there are kind of two ways on how you can kind of trade for your entry, and then the way your stop comes in. So let's just say, for example, we entered the low and we entered in here. What you would do is you would put your stop loss just above the highs over there, and then you'll set your take profit target. How I like to do it is 1-to-1. I don't know what 1-to-1 is, but we'll just probably, it's probably about there somewhere. That for me would then be there. And then what I mentioned so the previous video is what I like to see is when price is doing this kind of movement, more than likely price wants to get to the next round number level at a minimum. As you can see here, price didn't really get there in the end, but it majority of the time likes to do that. So depending on how much value I can get out of this, that's kind of where I'll be looking to kind of place a second profit target. If you want to take off half when it gets to here, move stop to break even, and then just try pick up the rest over there. Many different ways you can kind of play with it, but at least get to 1-to-1 before you start taking money off the table and moving your stop to break even. So I really hope that makes a lot of sense for that. Again, give me any questions that you've got. And I just want to end with another trade opportunity on the same chart, and hopefully you guys have seen it. Probably not actually, because you can't see the MACD, and this is using the RSI MTF indicator. So let's just say you took that trade or you missed that trade, whatever. Price is now in a short-term downtrend, and now what we're starting to get is a signal over here indicated by these arrows that price is oversold on the 15 minute, the 15 minute, the 30 minute, and the 1 hour chart. So again, these are all push notifications to my phone, and I've got 3 signals coming in there. So as soon as I got the first arrow, what I wanted to do was then start watching the chart. So every 15 minutes, so 15, 30, 45 minutes there, we had 3 arrows 15 minutes apart. So the reason why I like this trade for a long trade is 2 things. One, again, price is at that round number level, and it's at the 500 level this time, which is great to see. The next thing I'm looking at is there any pin bars or anything? There's no pin bars or anything forming. The bit I'm looking at now is there any divergence? Now, the good thing is, as hopefully you can see, is that we have price making lower lows and the indicator making higher lows. Again, that again is disagreement between price and the oscillator, and that is regular bullish divergence. Now we spotted that is when do we enter this trade? So again, the more aggressive one is entering on the close of the bar where the RSI comes out of overbought, oversold. So in this case, this bar here doesn't have an arrow, so at least the 15-minute chart is now out of oversold territory. So you would enter here, it goes against you a little bit, and then you go up, and then you'll have your go down a little bit, is have your stop loss just below the lows and just below that round number level. And again, what you would do here is see where the value is, and the value, I think 1-to-1 is probably around here. And again, as you can see, it naturally wants to get to its next kind of level majority of the time. So it kind of blew through it on this on this candle here. So that's the first way that you can enter. The second entry is, again, like I mentioned before, is the crossover. So in this example over here, if I can just draw where the crossover takes place, probably crosses over around this bar over here. And again, here on this scenario, you've got your stop loss quite wide this time, and you might not have the right value there. So again, that's all down to your personal preference in terms of profit targets, but at least for a minimum, my personal perspective, if you're trading these natural support and resistance lines, you got to make sure that your profit target, your 1-to-1, is below the next level, because it may not get there some of the time. So I really hope you found this useful. What I've got now is I put the Confluence playlist on there, as well as my Forex scalping course. So you guys can have a look at that straight away, and learn this technique in more detail. Like I said, give this video a thumbs up. It really helps with the channel. And comment down below if you've got any questions, and check out the videos on the screen now.